press. The smart entrepreneurs, investors, and developers are working on cryptocurrencies and putting down money. Investors such as the founder of PayPal, Unisquare Ventures, and Mark Andreessen are all investing in Bitcoin companies, and they look at this as the next interesting technology platform to invest in. Companies such as Overstock, Zynga, Stripe, Tiger Direct, and Square have all announced they will be starting to accept Bitcoin during this year. And then you have the regulators and the legislators scratching their heads, how to regulate this, and if they can even regulate this new currency. While most of us are still trying to understand what this digital currency is and how to use it, the best developers out there are putting down a lot of energy and keep innovating about digital currencies. So if I, being 44 years old, take a step back and look at this to me feels exactly like the period between 94 and 97, when people were scratching their heads if the internet, the web, e-commerce were here to stay, whether it was even legal to put advertising onto a website or make a telephone call over the internet. It feels exactly that same thing. Now, the picture is pretty much clear when it comes to the web. The jury is still out for Bitcoin. So, having said that, let me introduce my co-panelists here, Hanno Pingsmann and Tomas Ackermann. Hanno is the Global Head of Operations at payleven, Europe's leader in mobile card payments. payleven's mission is to allow small shops, restaurants and such to accept card payments through a mobile terminal. It was the first player to offer the European market a mobile chip and PIN card reader, and also the first to make this technology available in retail stores. This year, payleven will also roll out near-field communication. The company is headquartered in London and Berlin. Hanno at the company is responsible for building and operating the platform for mobile point of sale across 9 European countries. Previously in his life, he was a consultant with Bain, advising clients in the payment sector. Tomas Ackermann, over there, is the CTO of Bitcoin Brothers. I like the name, I think it's genius. Thomas has had a distinguished career of more than 25 years in startups and Fortune 500 companies, 18 years of which he spent in the US, including Silicon Valley. And he was an active member of the pre-internet geek world during the 1980s and early 90s, when the internet was still ad-free. Thomas participated in many technical firsts. By way of example, he was involved with the first ISP in his hometown, the first lossless digitalization of X-ray images, the first animation on the web, the first content aggregation website with more than 400 contributors, the first free public Wi-Fi hotspot, and many more. Now he's working on another first, a massive and limitless scalable Bitcoin computing power for tomorrow's Bitcoin transaction platform to allow the likes of Amazon and eBay to accept Bitcoins with their respective large transaction volumes. Welcome to our panel members here. So, maybe to start the discussion, how many Bitcoins do you own, Thomas, and how did you use them?
Very good question. The conception is always that people have like these huge amassed amounts of Bitcoins. I actually currently own 2 Bitcoins, so not a huge amount of wealth. Now we're trying to develop the technology, and I use it for personal use to try what I can pay for it. We do pay a bunch of company expenses, of course, in Bitcoin already. We flew just the other day to Rome to meet a potential investor, and we flew there for 1 day to and fro and paid for all of this in Bitcoin. So me personally, just a small, tiny amount. I'm not one of those big Bitcoin millionaires.
All right. Okay. Can you explain to us what the Bitcoin actually is? It seems like this fluffy digital thing up in the air. Why does that value?
Yeah, indeed. I'm in a lucky position to represent the cool new stuff for the next century, and what we might all be using in payment in the future. What Bitcoin actually is, and inspired by the previous video we had, to try to put it back very simply, is a digital currency. So it's not the same thing as you put in your pocket and get your euro notes out. It's a transparent currency that is only based on cryptology, on very expensive computing power, hashing of data that verifies each individual unit of this currency. It's limited to roughly 21 billion bitcoins, half of which have been calculated and used with Bitcoin hashing, created, so to say. The other half is still to be done until about 2140, so it's a currency for this century and the next one. The big distinguishing factor is the world is changing. We once knew that, as Stefan said, with the internet. Suddenly we had a communication, media, trading platform that spans the globe without any limits to national borders, influences of media control, politics, anything else. We've seen out of that the ability of the Arab Spring coming up because people could freely communicate. Bitcoin is not very different from that. It's also an open source, freely available, transparent protocol that represents a digital currency to allow global trading without any outside influences. There's no such thing as an individual controlling means. The network is decentralized by the protocol, so nobody has full control over it or any parts of it. And you have the same amount of value per Bitcoin around the globe. So you don't have to say, like, if you live in the United States, you want to buy something from a different country in this global trading world, and you have to pay like a huge fee to transfer that into another country. It's one global thing if you pay locally for the beer in your pub, or if you buy something in China to import it to your country.
Oh, that's interesting. I mean, the fact that it's decentralized. If I recall the incident of WikiLeaks, when the US government leaked on the credit card companies, to basically shut off the funds to WikiLeaks. Now, had they accepted Bitcoin at the time, that wouldn't have been possible. That seems like a pretty big idea, right? Yeah, okay. So the decentralized aspect is pretty important. But who came up with Bitcoin in the first place? How did it come about? It seems like the technology encryption has been around for a long time.
Yeah, it's using cryptology to make sure there's a proof of work and that it can't be faked. Originally, it was just one guy who had this brilliant idea. Somebody who remained, or tried to remain very, with much effort to remain anonymous, so he wouldn't take the credit. It was a Japanese name, who knows who that is, everybody has different ideas. But he came up with this idea to have a independent currency that's only based on computing power, cannot be influenced by any group or institution or politics, and designed a mathematical concept to represent that value in it. And as it is with many other ideas, someone just had it and said, like, look at this, open source, and then you have a lot of other people look at it and say, oh my god, this is a really cool idea. And if that really holds up to this effort, then it will replicate it. People pick it up, and then it just becomes popular. Bitcoin was the first one of that kind, and that's why it's the biggest. There are some other currencies, but there's always like the Me Too kind of approach, and Bitcoin, therefore, is that number one currency that you associate with cryptocurrencies. Even though, to be say in fairness, there are some others that are trying to catch up in the market valuation. Is like huge difference.
Okay. Hanno, when I pay with a dollar or a euro, I know it's backed up by a central bank, so that there are mechanisms to provide some stability to that currency. I mean, where's the value in a Bitcoin? I mean, what am I trusting in actually? What is it? How does it work?
Well, actually, if you define the term currency, the currency is actually defined as widely accepted medium for exchange of value, a safe storage of value, and also a certain legal status and recognition. The value of a Bitcoin is not backed by central bank, as you said. It's just made up. It's not backed by intrinsic value, like commodities. It's just made up by supply and demand, which is actually not a systematic failure of the system. This is how markets actually work. However, there is no central institution that is able to control the supply of Bitcoins, which leads to the fact that we see currently tremendous volatility in the price of Bitcoins. If you double check on what you need to actually have this currency, stability of the price is one of the core elements. Currently, I just checked the 3 months chart of the Bitcoin price. I think it ranges from $700 wants to own a currency that's so fluctuating? We're all used to having currencies which are sort of stable, yeah, and we accept 2% inflation to be a stable currency. So I know when I have $500 that I can buy something for $500 in 3 months' time. With Bitcoin, it's a tougher challenge. So it's the intrinsic value of a Bitcoin, to be honest, in economic terms, it's zero. Because if the Bitcoin community breaks together,
so the value is negotiated in the free market exchange. All right, I get it. Okay. How, Thomas, how does it work in a peer-to-peer decentralized model? Who stops me from spending my Bitcoin twice?
Well,
I own it. I can give it to you, and I can give it to him as well. I mean, how does that work?
Yeah, of course, there's some validation built into the system to avoid exactly that. And to kind of pick up where Hanno led off, having no central control over something is often looked as a downside of it. It can also be an upside. I mean, we live in Europe, in a very stable economy. The euro that we use every day, these days still, for stuff, is fairly stable. But if you live in Russia and you have some bare-chested guy running around on a horse and say, well, let me go and invade some other country, your currency may just drop by 30% in value within a week or so. So there's some volatility in that as well, even though there's a very centralized control over that particular currency called the ruble. If you live in South America, the situation is a lot graver. So you need to look at it as a completely global solution and not just one for your tiny little, not so little area like in Europe. So if you spend that money, there's some protocols where right now, if I hand you a 50-euro note, you take the physical note and you have it, and I don't have it any longer. In Bitcoin, of course, you don't have anything you can touch. It's a digital currency. It's a cryptological currency. So in order to make sure that that 50-euro note in comparison in Bitcoin doesn't split two ways, and suddenly you spend 100, you basically have a protocol where it's like, I give this Bitcoin that has a unique ID. For my unique ID, is an anonymous ID unless I choose to associate my name with it, and give it to somebody else in the system. There is a transaction record. The Bitcoin blockchain is like the general ledger that includes the whole network. You will then process that as a payment and say, okay, this ID has now given this much amount of Bitcoin to that ID, and it goes through that cryptological verification process. And currently, while the system is in its infancy, it takes 9.5 minutes for the next block to be transferred to make sure that this transaction is validated. In the meantime, I could try to spend the same something else, but unless the transaction is validated, the recipient won't actually receive that kind of money. And that is in comparison to the old world that Hanno has the unfortunate task of defending with a future. I'm sorry that you have to take that role. But the difference is, if you use traditional means like credit card or so, you make that same kind of like digital transfer. You also don't touch any money. I will show you how it works. But you can go back after 3 months and say like, well, something I felt was wrong, but reverse the transaction, and I get the money back. And the merchant has a very hard time to claim the money and justify that he actually earned that transaction. In Bitcoin, once the transaction is cleared, the transaction is over and it cannot be reversed. It's in the general ledger of the entire transaction.
That's open to everybody to see. So in principle, everybody can see who spent money or who paid money to who.
Yes, you can say like which IDs owns which many Bitcoin, or each Bitcoin belongs to, and where it runs. Each Bitcoin has its transaction history in the very beginning when it was created in the mining process. So there's absolute transparency. It's like the ultimate, so to say, open source. There's no secrets. Everybody can see everything. It has, of course, built-in anonymity. If you don't choose to identify your ID, you can have more than one ID in the Bitcoin network. Each ID has a certain amount of Bitcoin associated with it. You can remain completely anonymous if you choose. That's by default. Or you can say, that ID is actually me. There's some benefits sometimes to have more credibility and doing business with people that they don't always really do that. So you can choose to identify yourself as one.
Maybe there's one interesting addition to the discussion. It's a small one, which in a way relates to very old money also, because what Bitcoin does, in comparison to money that is, for example, transferred by credit card, is it gives you the freedom to choose whether you want to act
exactly privacy or anonymity or not, right? Which you might not be able to do if you use a credit card, because all that data might also be transferred and checked maybe by a central agency. So, in fact, cash can be totally anonymous, and that's why maybe people even use cash to stay very anonymous, even probably for shady businesses. But with Bitcoin, you can choose one or the other world. You can be fully transparent, or you can be private, and that's probably also where some of the negative press came from that Bitcoin had in the past. But if you look at it, it only gives people freedom to choose how transparent they want to be, and if they freely decide not to be so, then it's their free choice. So I think it's an interesting interlinkage between old and new as well.
So, is that maybe one of the reasons why regulators are so nervous about this? I mean, the whole anonymity, pseudonymity, whatever discussion. I mean, you take on customers for process payments on their behalf, so you're probably aware of some of the issues that involves.
Yes, I think anonymity, it's part of the enthusiasm of Bitcoin, to be honest. Let me make a very blunt statement now. So when I make a legit purchase on the e-commerce, why should I stay anonymous? There's some reasons, but in most cases it might be associated to adult industry, gambling, or then you work closely to criminal backgrounds, money laundering. In order to prevent these, in order to control these, the financial regulators have set very clear standards and rules that the financial industry has to follow. For us as a credit card company, this means every customer who wants to have one of those smart and easy-to-use card terminals needs to be so-called KYC'd. This means know your customer. So if Michael wants to have a card terminal in order to sell tickets on the spot for the next venture summit, I need to have his ID card, a utility bill, and I also need to know if this is a corporation or a single man business. So there's no way of actually getting around that in the financial services. And I think this is for good reasons, because financial services have always been subject to money laundering, to terrorist financing, and any sort of crime. And you have to ask yourself the question, if you create a cryptocurrency or any kind of new currency, it doesn't have to be Bitcoin, by the way. This argument goes for all non-regulated currencies. If you want to open up to market participants who have to hide their original reasons of transaction and the origin of the funds. I'm telling my employees every time when they have a problem checking a customer, for example, there's a bank account which is owned by somebody else, a joint bank account. Every time we don't get the ID card from that second person, I'm telling my people, okay, how do you know that this second bank account holder is not a terrorist or any sort of criminal? So this is why regulation was made up. And I think so far the credit card industry works pretty well in terms of preventing money laundering.
Right. Okay, so I'm torn in between. On the one hand, I see the promise of anonymity. On the other hand, I keep thinking, well, in order to get my bitcoins in the first place, I have to find an exchange where I can buy Bitcoin, right? So that Bitcoin I'm likely to pay for with some legal tender, euros or dollar or whatnot. So at that point in time, there is a record for that specific transaction. So that exchange knows that I bought Bitcoin and can also associate that specific Bitcoin with my Bitcoin ID. And therefrom onwards, there's full transparency. I mean, if the legislators would choose to, they could force the exchange to, give transparency as to what legal name or what natural name refers to what Bitcoin identity. And at that point, there would be perfect transparency, and it should be the regulators' wet dream, shouldn't it? Or am I wrong there?
Well, basically what it means is to have the freedom of contract. You can choose to obtain your Bitcoin. You have to separate it right now, where Bitcoin is in its infancy, it's still starting. It's like the pre-1994 phase of the internet. The consumers and masses have not yet joined it. So right now, most popular way to get Bitcoins is you actually buy it somewhere for a fiat, I believe it's currency, euros or dollars. And you typically do that at marketplaces that set up online where people sell their Bitcoins and say that, I offer 1 Bitcoin for currently 320 euros, you want to buy it, and yes, you can buy it. And the marketplace will take a tiny percentage for providing that marketplace. Now, most of these just want to play it safe and say freedom of contract. If you want to do business with this marketplace, we prefer you identify yourself. You can do a basic identification. If you want to have a higher trading volume, you have to go in Germany to a post ID verification of your identity to do that. But it's not the only way. It's just the most popular and the one that people know about. If I want to do something that I don't want to really know about, and choose not to be so transparent. Like, it's a good example. Having lived in the United States for so long, I'm an avid supporter of the Electronic Frontier Foundation, and I donate regularly small amounts. Here in Germany, I have a social acceptance of that. People say, oh, that's cool. Do that, help against the NSA and all some other stuff, abuses of power. If I were to still live in the United States, where I also donated to the EFF, it's not as well accepted as here. If I were to live in Syria, for too much since that came up earlier, I definitely have a high incentive to make sure that it's not as transparent, because they might just come and get me and put me in some jail, and they might even get killed for doing something that's not considered cool by the government. If I wanted to, I mentioned adult stuff, if I wanted to purchase online some adult content, and it may make a difference what kind of content I buy there, like sexual orientation stuff, something like that, that if I feel that it would harm my profession, if I did something that's interested in something that is not so popular maybe, in Germany it's not so much an issue, in other countries it is, I would also have an incentive to choose not to be as transparent as I would otherwise easily be.
So how in that case would I buy my Bitcoin not to be traceable?
Thank you for reminding me. I was getting sidetracked for a minute. For instance, in Berlin, where there's a very active Bitcoin scene, you can just go into like room 77, it's a pub over there, where you have an ATM machine, and this ATM machine, you identify against it with your Bitcoin wallet. You just take your phone and scan a code on the display, and you pay with that on the machine. So with that,
you pay cash or?
Yeah, you can either do it with cash, typically or with some online funds that you have. You can, of course, choose it to put a bank account that you already have, which, of course, limits the transparency. I mean, it does add some identification factor, but you could also buy, like a gift card somewhere, and you pay with that gift card that's associated in,
Right. But in principle, you could walk out of the door and Bitcoins would change hands, and there would be no public record of any significance that would make that transparent.
The Bitcoin system, the general ledger, would know that my wallet ID on my smartphone purchased 10 Bitcoins on that machine. So the Bitcoins would be traceable, but only to my digital ID. And if I don't choose to associate that digital ID with my name, Tomas Ackermann, then nobody would know that I actually have those Bitcoins now as an individual, and I can spend it wherever without being traced back that I supported the EFF or something else that I wouldn't really want to disseminate it publicly or do something else with it.
Now, that sort of explains why Bitcoin is so popular in Argentina, which has strict capital controls, a very weak currency. There's, I think, a 15 or 20% levy on credit card payments outside the country because they don't want to stop the outflow of hard currency out of the country. So, in principle, I can buy Bitcoin in the local market and then spend it in the US and circumnavigate that capital control. Well, that's pretty powerful. If I think that one step further, I mean, capital controls, you could argue, are a legitimate thing that a policymaker wants to implement to stabilize an economy. So to that extent, Bitcoin could also have a huge destabilizing effect because, the classical means of the central bank are no longer available because they can be so easily circumnavigated.
Yeah, but you can look at this two ways. Of course, you can abuse any system in trying to destabilize something and move capital that's needed in one economy someplace else. Like Russia has lost enormous amounts of capital just recently that people withdraw. It's like, that's too shaky for me. I took my billions of dollars someplace else. But on the other hand, our current fiat systems are not safe for that either. You have George Soros, who does high-frequency banking and bets against the British pound, and suddenly the British pound tumbles. I mean, there's some influences in the regular world, so to say, in old world as well. Every system always has some people, some bad people. You have 99 good people and one person tries to abuse the system, and sometimes they will find their way to take advantage of something.
The engineer would say there's always a trade-off in doing
Yeah,
it.
that's the case. If you buy a car, you have that used car dealer, that's just a crook. You have that in fiat currency, and how that works as well. That's not a problem specific to cryptocurrencies. It's a problem specific to human nature, unfortunately.
Maybe just Thomas, one quick reference point. What's the biggest deal ever paid with Bitcoin so far? Do you know?
No, honestly, I don't know.
Yeah, I know. Yeah, it's about some capital, some asset in America. They bought 67 acres of land. 67. Yeah.
Paid by Bitcoin.
Yeah, paid by bitcoins. It's no problem. Also, we have in Berlin bought a lot of homes and for about 6.7 million at the moment.
Okay, so property bought in Berlin.
Property in Berlin.
6.7 million
Yeah, because we have.
paid by Bitcoins.
Sure.
In these cases, is the buyer known or not known?
the buyer is only known to the makler and not to the public. I think at the moment we have 3 big buyers in Berlin who buy some stuff for bitcoins, and most of them are connected over the guys from Bitcoins Berlin because they seeked out some maklers who are really interested to do business in bitcoins.
So you're saying that there are 3 people in Berlin buying big time property with
Yeah,
bitcoins?
multi-million-dollar property for bitcoins.
And their identity is known by the people who
Yeah.
are the agents for them, but by no one else.
Right, that's right. That's like Russians.
Just to put this into perspective, let's ask the audience, who owns a Bitcoin?
Hands up.
Who owns Bitcoin? 1, 2? Man, this is really old school audience. And by the way, the 2 guys who own a Bitcoin are from Bitcoin Brothers, so that's
I mean, come to us later. We'll install wallets and we'll give you Bitcoin. So come to us later. I'm serious.
I mean, I bought my first Bitcoin about half a year ago, and it was probably a 3-hour process to figure out what are the different means, what technology do I need to use, what is a wallet, where do I install it, what about security, can somebody steal this stuff from me? By the way, I mean, if it's all that secure, well, how could this Mount Gox thing happen anyway?
That's a very good question.
And maybe Thomas explain
That's
what-
a question from the audience, by the way.
Yeah. Basically, what is a phenomenon right now still in the Bitcoin world, which is seen in other emerging technologies. You have the enthusiasts first. People say, oh my God, this is really so cool. This is going to be the big thing for this coming century. This is so smart, so cool. We've got to get involved in that and be like an early adopter, early participant, early entrepreneur. But it's a lot of enthusiasm and drive, not necessarily knowledge and being good at it, because you're still trying to figure it out. And so the early exchanges, Mt. Gox was like one of the first ones, was exactly that. Mixed with potentially, I'm not going to try to say anything that's not true here, but potentially mixed in with a little bit of a criminal factor. That's not been established yet. But the issue is that they were simply not set up to do basic bookkeeping. This is not necessarily a cryptocurrency issue. You just have to count your beans correctly and put your customer's beans in one corner and not in your own pocket. And if you don't do that properly, be it with a fiat currency or with a cryptocurrency, you set yourself up for problems. And if you finance future deals with money that's not your own, that's also a similar problem. And mixed in with potentially some criminal skimming factors that may or may not have occurred, then of course you can have a disaster that gets a lot of bad press. However, as it says, every press is good press, the propaganda, because it is in everybody's mouth, everybody talks about it. And in order to prepare myself, like, how do I explain Bitcoin? And my first question here, simply, I looked it up on Google and said, like, how to do that? And I typed in, what is? And Google also suggested immediately, my first choice, Bitcoin. So that's like, a lot of people look that up. Everybody's interested, everybody sees the potential. And I'm curious, next year, the next Munich Venture Summit, when the question is answered, asked how many people want Bitcoin, how many hands will go up then?
So you won't be invited to come back next year to ask that question.
Yeah, okay. So there's a question from the audience. So what happens if the Bitcoin owner forgot his ID or just dies? I mean, what happens to his wallet?
Yeah, at the current evolution step of Bitcoin, the Bitcoins are associated with your digital ID, and it's similar if you have all your money in a wallet, you know, a physical wallet in my pocket, and I lose that wallet, it's gone. I cannot go back and claim, you know, that, somebody gave me my wallet back or the equivalent of that value because I was stupid enough to lose it. In the digital world, it's very similar. If you associate value to a digital ID and you don't make backup copies, very similar to your family pictures in your computer, your hard drive crashes and you lose your pictures unless you made a backup copy in the cloud or somewhere else. There is a risk that you lose it. The same risk is, you know, I go up front and pay for like a coffee and put my money out and my 50 euro note falls down because I don't put it away properly, then my fault for losing it. So there is a chance in those circumstances to actually lose it. It is also, of course, possible that somebody hacks into your computer and makes a transaction without your knowledge, the same way as they might hack into your computer and access your, you know, Georgia bank account and makes a transaction there. It would also be very hard to recover. In Bitcoin, at least, you can trace that money. That money is in the public ledger with the entire trading history. So it knows when I had that Bitcoin, and when that Bitcoin somehow disappears to a hacker, I can follow that Bitcoin and select where did that go, and have at least a chance of recovering it.
Right. So in today's world, Hanno, I as an e-commerce merchant, I pay about 2 to 3% in credit card transaction fees. Now, with Bitcoin, I mean, will that all go away, that business opportunity for the credit card companies? What is the value they can still provide in a world where Bitcoin slashes the transaction cost dramatically?
There's one significant difference, especially for the consumer, or let's call it the shopper. If you buy with Bitcoin, then this transaction is not reversible, which is good for the shop, and Thomas made this argument at the beginning. On the other hand, for us as consumers, this means once you purchase something with Bitcoins and the shop doesn't deliver goods, doesn't deliver as described, or even it's fraud because of deferred time of delivery of the services, you have actually very limited options to get your money back. And this is actually the two-sided trust of a system like the credit card industry, that so-called chargeback, that the shops maybe, if they don't deliver goods, if they don't stick to the rules, the money is being paid back to the card issuing banks. Currently, it's not possible for Bitcoins. I think there will also be some players offering that services. But if you offer services associated with a certain covering of risk, this is not for free. So this will have to be paid, I think, presumably by the e-commerce shops. Secondly, there are exchange platforms and processors also in the Bitcoin industry who will want to make money. So I assume that there will also be transaction costs. So far in the credit card industry, those costs made up between 2 and 3%. And there's a third player making money, which is the credit card issuing bank. Maybe this fee will not exist, but we will pay fee for processing and we will pay, of course, fees for the security so that consumers actually are on the safe side when buying goods.
Here's another question from the audience. Isn't Bitcoin another tool of control for authoritarian regimes? Record of every exchange traced back to a person gives a lot of information and hence also control. Well, maybe I can give that a step. It's true to the extent that if you bought your Bitcoin with your credit card, there's a way to link it back to your name and social security number. If you bought that same Bitcoin, however, with cash in a parking lot, there's no way of doing that. So yes, in principle, but if you're worried, there's ways of eliminating that risk. That's correct, yeah.
Stefan, just one for the audience. You guys are still here. can we have a show of hands on who many people can imagine buying a Bitcoin in the future in order to pay for a good that you don't want anyone else to know that you bought it? Whatever that is. I mean, we're not going to go into details here, right? But who can imagine buying a Bitcoin in the future? Show of hands. Okay, interesting. When? 1 year from now? How many people? 2 years from now? Faster than that? Interesting. Okay, so one third, right? So definitely interesting. Thomas, quick question to you. Is there a bank specializing on Bitcoin? Any bank in the world?
Yeah, that's a tricky question. Of course, the bank have a very twofold approach on this. On the one side, they say, this is going to cost us a lot of money, the most successful Bitcoin gets. It would eat in their business, because all the money handlers, like you have typically three parties in a transaction these days with most current non-cash transactions. Cash transactions, I give Hanno my money and he takes it, it's done. Everything else is credit cards, other means of online money transfers, always involve three parties. I give it to a bank, a processing service, a money transfer service, and they then hand it on to the actual recipient. Bitcoin takes that middle level completely out. So banks know that this is going to hurt. One way or another, it's going to hurt.
There's an additional aspect, because one of the key functions of a bank is not only to store your money, but to give loans. Now, and that's actually how the process of money creation works in our economy. They issue money that previously didn't exist because they're allowed to do that. Now, as Bitcoins have to be mined, that doesn't work any longer. So that function of a bank probably doesn't any longer exist. So I think there are companies like Coinbase, but they're mostly in the business of storing your Bitcoin in an online locker and helping you transact with Bitcoins and buying Bitcoins.
Yeah, so there are some existing banks that are getting very carefully into that Bitcoin realm, because they know you can rather embrace it or fight it. If you fight it, you lose money. If you embrace it, you might participate and everybody's happy. There are also banks, when I say banks, I mean private banks, private enterprises, that are specifically setting themselves up to handle Bitcoin transactions and get involved in sort of a money storing or value storing device, like would bring your money to keep it safely, or just to transfer it to your party that you wanted to have transferred to. And when you also speak about banks, then there of course are the government banks, the central banks. These banks of course have a very completely different approach, and they actually make money. And if I may explore on that with it, if you think about the United States, because there's not so much known about it, they have an enormous amount of debts, which is like $14 trillion right now. And to keep the economy going and regulate it in some way, they're actually printing money. And it's not like it used to be in the old days, 100 years back, where the equivalent of the money that was fluctuating around in paper money that you would take around was backed up by gold and some big Ford Knox thing. The economies have grown so much that it's not really practical to do it anymore. And that's why these currencies are called fiat currencies. We believe in our currency. We truly believe in our currency. We used to believe the Deutschmark, solid, we now believe in the euro, despite all the other debt crises, this and that. We all believe it's a fairly stable and solid currency. With the dollar, it's maybe not exactly the same thing, but if you think of other currencies, that is a completely different issue. And
I think just fiat, right? So fiat means as in Latin?
Yeah, Latin.
So fiat, may there be money, I believe in the fact that there may be money.
Yeah.
Okay.
And those banks, I guess, not what there was. Those banks can actually manipulate the amount of money and fluctuation without having any backup. The backup is your belief in that currency, that it will not go away or have drastic changes in value. You're only concerned about whether it went down, not whether it went up, but that it is kept stable. And those banks, of course, have absolutely no interest whatsoever in any currency that takes them out of the picture, because they are nationalized. Bitcoin is the same as the internet. It has no regards for cultures, for national borders, for geography. It's a global thing as well as the internet. Even though people try to regulate the internet, it's not that they want to try to regulate Bitcoin and keep it away, because it's a threat of control, it's a threat to value to those societies. in the internet, we still see this today. Turkey trying to block Twitter. It worked for 6 hours or so. You can't take it away from people again. Once they've enjoyed the freedom of having free information flow and collaborating with others online, you cannot reverse that. And the same is with the digital currency. Once they've enjoyed the freedom that I don't have to pay Western Union to wire my money home. If I live in Germany and make money here, and my family is in Romania or in Mexico, and I pay a significant portion of that hard-earned money to my transfer company like Western Union, they're the first to die. Okay, very quickly.
All right, I think we got to wrap things up here. Hanno, do you think that Bitcoin is here to stay? Will we all be paying in a virtual currency in 5 years' time?
I think Bitcoin is a very interesting and promising technology. It's a technology which may emerge as an additional or a more efficient payment system compared to others. I doubt that it's going to be a real currency, and given the current volatility which we see in prices, which is a core element for consumers to trust in currency and money, I don't believe that it's going to be become mainstream yet. But the technology itself is very interesting, and it solves a lot of problems by transferring property to somebody else, and you can use this in various other occasions. It doesn't actually have to be a currency, so it can be a better payment system, it can be a better system for transferring rights of ownership.
So, one final question for you. The Bitcoin market cap today is around $2 billion?
4 billion.
I think it came down again.
4 billion.
Now it's about
4 million. So what will it be in 2 years' time? What will it be in 2 years' time? Tens of billions or hundreds of billions?
I mean, we're still in the infancy of it, and to come back to the actual purpose of this panel, in a way, we are, compared to the internet, in that pre-1994 phase. It's still fairly immature, it's still evolving. And for entrepreneurs and people who venture out to create businesses and value, this is the perfect time, of course, to get involved in it and do this very early on as it matures. It is not going to replace any fiat currencies for a very long time, if ever, but I think that it will grow very, very rapidly because of the advantages that it offers. And on that platform, the Bitcoin protocol that's open source, there will be a multitude of businesses and ideas that will flourish based on that new platform that will become very popular. So I think the market value will probably explode within a very short time.
All right, so these are exciting times for entrepreneurs. Here's the technology and the platform that you can innovate on. Some of the best VCs are putting down bets, so exciting times for entrepreneurs. With that, back to Michel.
Well, nothing to add from my side except for one recommendation. Some of you might have heard that there's a professor in Spain at IE in Madrid, and he looked into the way that the industry of piracy has developed historically over time. And if you go Google it, and Google piracy and the development of new industries, you will find 2-3 videos online that analyze piracy from an historic point of view and come up with the fact that whenever there were entrepreneurs that truly challenged the foundations of a running system, they were first funded by the state and then they were called pirates, right? And afterwards, they were then legalized as pirates because the industries were there to stay. So when I looked at this movie or this short video, I thought at the moment a lot of Bitcoin entrepreneurs are close to being called pirates, but in the future they might be identified as just being great, Christopher Columbuses of a new way of looking at money in the future. We simply don't know yet, right? So Thomas, if you would want to come back in 2 years from now, and we afterwards on the little after party have a bet, I would bet a case of beer on the value of the Bitcoin against you, and 2 years from now we'll see who wins that bet, and whether you are a Christopher Columbus or are closer to being a pirate. Is that a deal?
Absolutely, and the thing is, of course,
and we're drinking with Hanno and Stefan.
Yes, of course, sure. I mean, actually, I really feel bad for Hanno because he has to defend it. And I know it was really good. And I'm, the position I guess earlier, I can say that the cool new stuff of the next century to come. But I do believe that that would be very interesting bet. Of course, I know how I bet for that because I'm convinced. On our website, we have only two big things. We have our own proprietary ship, with one word below it that says in big bold letters, disruptive. And I think it will be very disruptive. Of course, we built a legal business with big supercomputers and all that stuff. So we don't really fear the pirate stuff so much.
So you're shipbuilder.
But we do have to do a lot of explaining on what it actually is and what it does. But I believe that in 2 years' time, he would probably, we should bet about some Bitcoin for that VR case.
Okay.
So we'll probably make a
So the banks better wake up. In the process of preparing for this panel, I tried to get somebody senior from a German bank. And not just one bank, several banks told me, oh, actually, we're not really on top of this topic quite yet. So it's not even on their radar screen before. They've heard of it, but that's probably where it stops. All right.
All right. What we'll do now is we'll have a coffee break, half an hour again. Get up, hug each other, get to know each other, and then we will continue with the future of security, which actually links very well to this panel, because we'll look at how does security technology link into what you guys just discussed and into other things. So we'll see you back in half an hour. Enjoy your time, enjoy the coffee. We don't charge any bitcoins for it. See you in half an hour.